Oh, gotcha. Well, I'm just happy to be here with you guys. So
Yeah, we always love having you.
the feeling's mutual.
Good to see you, Rebecca.
Yes, you too. How's it going?
If it got any better, I would be like in Hollywood, a movie star, but I'm just me and I'm loving it. It's a great day. It's absolutely a great day today.
Oh, that's great. Did it rain last night for you guys? It was just torrential storms for us.
Yeah, it rained where I live, but today it is glorious.
They keep warning us this is supposed to rain all week, but yes, I was able to take a nice little walk at lunchtime. Very rejuvenating. Very nice.
Hey, Rebecca, have you heard anything about the length of time it's taking for folks to get their money from the idol?
Oh, yeah. I've had some people tell me that they got it right away,
Uh-huh.
especially even with the reconsideration, that it
Yeah.
took less than 2 weeks to get it. And I've had others, I had a call just yesterday. The gentleman is experienced with SBA, has great cash flow. Like you think back, you're like, what are those triggers? He has zero triggers that I can identify.
Mm-hmm.
And he has still not received communication back from them for a very long period of time.
Wow.
And yeah, and he's a minority business owner too. So I don't understand what's going on. There seems to be just some, I don't know, no rhyme or reason for it. I don't know.
Yeah, I had somebody ask me that question. I said, well, let me find out.
Yeah, so all I do know, just from like an outside person looking in and seeing the different processes as they have come up over the last year, is in order to meet demand, SBA has gone out to find contractors to be able to support the process.
Mm-hmm.
And I think it must be really hard to find qualified individuals because it seems that the same processors are getting inundated with the files and they're just not able to keep up with the demand is what it looks like is the conversation is it was sent over, it's been handled, it's been assigned, but then you go 2 3 weeks and you're not getting a response back. And
Mm-hmm.
then on the end of the operator, it's been assigned, there's nothing I can do until they pick up the file. And then finally that person, picks up the file and makes a quick decision. And the response is always, we have a huge demand and there's not enough attention to be able to handle it all so quickly. So I'm yeah.
It's well, I can understand. I can definitely understand that. So
Yeah,
they're dancing as fast as they can, I guess.
exactly right. Uh, I will look forward to the day that we don't have to worry about disaster assistance.
I know. I know. Will that come? Will that day be here soon, shortly?
No, I
Oh,
don't know. This whole like PPP thing has been a nightmare too. I don't know if you guys are dealing with that, but we still had people that were in the midst of their process and trying to get their paperwork updated, and they were just dropped. The 17th was that day, they just dropped. And so now you have all the people like, I've waited months and months. I've been trying forever and I still couldn't get to the end. And it's not even May 31st. It's just a horrible situation.
well, it's 3 o'clock, and to uh, be aware of everybody's time, we'll go ahead and get started. Welcome to today's presentation of the Shuttered Venue Operators Grant. My name is Paula McCain. I'm a recovery business advisor for the North Central Texas Small Business Development Center. Not sure if you all realized today is National Devil's Food Cake Day. I will be celebrating. The SBDC is a leading provider of assistance for the small businesses. We are grant funded, and because of that, we can offer our services to you at no cost. As I said, today we'll be talking about the Shuttered Venue Operators Grant. And if you have any questions, go ahead and put them in the chat room and we will address them at the end of the presentation. And now I'd like to introduce Rebecca Schultz. She's one of our favorites. Rebecca has been helping business owners to access money and financial education for many years. She is the founder and executive loan consultant of Centerlock Funding. And thank you, Rebecca, for being with us today.
Oh, thank you guys. I always enjoy coming on and talking about money. It's one of my favorite topics. And with that, let's talk about a new bucket of money, right?
Yes.
Some people are already aware of this bucket of money. Some people are standing on the sidelines trying to decide, do they jump in? Do they not jump in? Is it worth it to jump in? So hopefully today's presentation will give you a little bit more information you didn't think about or didn't really understand or connect, just based on the perspective I'm able to bring in. So my name is Rebecca Schultz. I am the founder and executive loan consultant for Centerlock. Right, I have 25 years plus of lending experience. The last 15 plus years have been dedicated to commercial lending and helping business owners be able to understand and access capital. So I'm going to bring that experience into the conversation. And as always, I like to start with a quote or something interesting. And so I'm a big fan of Brene Brown, and she talks about this quote, and I thought it was very appropriate for this particular presentation. Right? It is not the critic who counts, not the man who points out how the strong man stumbles or the doer of deeds could have done them better, but credit belongs to the man who is actually in the arena, whose face is marred by dust, sweat, and blood. Right? So in the arena, duking it out, that is definitely our shuttered venues. Right? That is the definition of what 2020 and going into 2021 has been for them. And so going into today's topic, we're going to handle these 4 different categories. We're going to talk about the Shuttered Venue Operator Grant, also known as the SVOG eligibility. I'm going to go slow on the eligibility side, by the way, because I think there's some confusion about what's considered shuttered venue. And there's a lot of like red tape around this conversation. So I'm going to hopefully dissect that enough to where people will walk away feeling very confident of where they stand in that conversation. Then we're going to go into calculating the financial support. What we've learned through the various COVID products is that understanding how much benefit you can gain takes perspective, right? You need to have the perspective on what the ultimate goal is and what they're trying to measure. So we're going to bust that down in that calculation to understand the objective, and then how you pull together the financial details to show the clearest picture. Okay, so again, a little bit different. I don't have to just cite numbers. We're going to have a better conversation about it. And we're going to talk a little bit about the application process, which, by the way, oh my goodness, the application process. This is a grant. It is not easy peasy here. All right. In fact, I didn't even want to show pictures of the slides. I'll confuse you all. So we're going to go through the application process, really talking about the intent, what the goal is, what we're trying to drive to, right? Because we're talking about calculating the financial support. And then the different types of documentation that's going to be needed in order to understand the qualifications. This is a different conversation, so I'll walk you through the best way I know how. We're going to end the conversation today on important details to remember, so those key takeaways in order to fully grasp the presentation, okay? That's the goal. So let's go ahead and start. So the SVOG eligibility. Now, back in early 2021, right, in January, when we learned that this was going to be coming out, there was a lot of stop and go with this product. And I'm going to relate the stop and go to the complexity of the different types of entities that are part of this industry. All right, so you got to understand there's maybe talent representatives, completely different from venues, right? But yet related, they're connected. You've got mobile venues, right? You've got stationary venues. You've got all different types of key players that contribute and make up the space. And so the complexity, the stop and go, has been on how do you fully define who they're trying to support and reach, and how do you document that and essentially call a number to it, right? It is a harder conversation to have. So going into eligibility, we're going to start with the basics, right? A shuttered venue is multiple things, but we're going to start with the live venue operators or promoters. Okay, so right there in that one line, you've got the venues, which are going to host the events. You've got the operators, right? Now notice they could be the same or could be different. There are some companies that will jump in as their business and help run the lights, run the show, maybe even run management for those that are separate from the venue. Right? And then you've got your promoters. So maybe you have professional marketers, right? Maybe you've got talent agents that, bring in the talent and then promote those separately. You've got a whole system, ecosystem of companies that support these shuttered venues, and they're wanting to make sure that they're including all of that. All right, then you've got theatrical producers. Okay, so theatrical producers, you think it's similar. These are more like your performing arts, right? And so they've defined performing arts going forward to make sure it was very clear who was included and who was not included. So we'll talk about that in a minute. You've got your performing arts organization operators, for-profit, nonprofit. You've got your relevant museum operators. Okay, so museums, and there's different categories around that, right? You've got zoos and aquariums who meet the specific criteria. All right, so again, not everybody's going to be eligible. Not every zoo is going to be eligible. Not every aquarium is going to be eligible. There's specific criteria to really denote those within the industry that didn't have the same type of opportunities for pivot, and so this support came out to guide them. All right, then you've got your motion picture theater operators. That's pretty clear, right? Your talent representatives, and then business entities owned and could be considered eligible when they pair or they support these specific venues, right? And they would have to meet these specific eligibility requirements. So if that feels complicated, you're not alone. It is. But again, we're going to try to wade through some of this conversation to dissect the requirements in a slightly different way so that people can really line themselves up and decide if they do fill the full requirements or eligibility. All right, so let's start. Let's break it down. All right, the principal business activity must be for the organization, promotion, management, or hosting of live concerts, comedy shows, theatrical productions, or other events by performing artists. All right, so live, right? Not recorded, not something you could stream necessarily, right? And we're talking about events where big crowds would typically come, right? And they would be present and in the midst of each other. And so separation or barriers, not necessarily an option for these businesses. So there you get this whole conversation about they weren't able to pivot, right? And they had to be promoted, right? So meaning that, and you'll see this in a minute, there is a connection between ticket sales, promotion or marketing of the events, and the inability to do that during this downtime. Okay, so next let's talk about that definition for performing arts. So they're very, very specific in saying that events such as musical concerts, comedy shows, theatrical productions like plays, right, dance performance, or other live renderings of similarly artistic work is considered performing arts. Now they're really clear in saying that if it was a sports event, right, that does not qualify as a performing arts. So, where I live, there's big stadiums, right, and they typically will have an option to have like concerts. Some concerts might be there, but they also may have basketball events, right? So even if they're a venue, right, with seated flooring and all of these things, if they only cater to the sports events, that would not be an eligible SVOG candidate, right? You have to have the performing arts aspect to it. Very interesting. All right, shuttered venues includes the museums and theaters, but those particular museums or theaters must have defined performance and audience space. All right, so if you think about a movie theater, right? There's the screen, right? Performance. If you're going to see a play, there's the stage, there's the performance. And then you've got fixed seating sitting there. You can't repurpose that space. You know, there's fixed seating there. And so it's a defined setup that didn't allow for those organizations to be able to pivot. And so the funding is provided. Right, on top of that, you have to sell tickets. And we had a lot of wedding venue and other event venue spaces where maybe they had a fixed stage, right? But the seating wasn't fixed, right? You could move that seating or you could fold it down. That's not eligible, right? It had to have like that fixed seating space, as well as they're requiring that they also have a couple different roles being involved, at least one individual that performed at least two of the following roles, which was the sound engineer, a booker, a promoter, stage manager, security personnel, and a box office manager. Okay, so that's a little eye-opening too, right? So it doesn't mean that you have to pay people to do these roles. Okay. So there are some organizations that have volunteers that sit behind a desk and take tickets or bring people in, right? Maybe they have a volunteer do the security, but they need at least have those two different roles and at least one person performing them, paid or unpaid. Woo! It's interesting, right? Okay, next, the SVOG applicants cannot have more than 10% of their 2019 gross income coming from federal funding. Right, so that gets a little complicated, all right, federal funding. Some people don't realize what's considered federal funding and what's considered state funding. And sometimes what they think is state funding could be federal funding. I know, right? Like you have to go deep into the conversations to determine if any federal money. Now, I'm going to add another layer of complexity to this. If the organization is a university, right? If they're accepting any type of financial aid products, right, including Pell Grants, right, that is a form of federal funding and that counts towards this 10%. So you really need to understand that gross revenue, right? Determine what's eligible revenue and not eligible revenue, and make sure that you can clearly state or show that you don't have more than that 10% federal funding. All right, with that, new topic. All right, the entity or majority owner that has 51% or greater ownership, right, cannot be listed on the stock market. Right, that's too big. This product is out there to help the smaller shuttered venues be able to survive. And so if you have the ability to go and raise money on the stock market, that's no longer small. Okay? We're going to give that a second there. That was a lot of information, but hopefully you're kind of seeing the picture that these particular venues that are eligible have live events where the community would come together. There's not a way for them to create barriers very easily within this in order to pivot, right? And they would not have been able to kind of market and they need the support getting the money together in order to take off again, right? To pick up the pieces and move forward. All right, so next, let's talk about the fact that there's ticket sales involved. All right, so I've talked to a lot of business owners that were able to define the space. They had the fixed seating, right? But they didn't necessarily sell the tickets. There was a conversation around maybe donations, basically making it free to the public, getting compensated on other ends, but not necessarily promoting the ticket sales. And more importantly, those tickets had to be available to the public not less than 60 days before the performance date. Okay, so that gets a little tricky. So if you kind of think of some examples here, let's say we're going to go watch a concert, right? You'll know that that concert will be marketed typically at the beginning of the year, maybe 6 months before the actual event, right? They're letting you know what's coming. That's the type of promotion they're expecting. If you're maybe a small business who does performing arts, and let's say you've got a spring fling that's coming up, right, and you start promoting for that spring fling maybe a month before it actually happens, and you're selling tickets to the community or making those tickets available just to the parents, right, but there's no promotion of sales. Big difference there, right? You have to have that aspect, and they're going to require that you document this for that 2020 and 2019 year in order to consider yourself eligible. Right, next, the SVOG applicants must have a host or must host an average of 4 events per month that covers the entire year. So that's not too bad, right? You need at least have 4 events per month over the course of the year, but they are stating that on that type of situation, if you are seasonal, you can show over a period of a year, you can average that out over a period of a year, all right? Now, they're also saying that your primary location must be in the United States, right? You can't have the events here in the United States, but have the organizing entity be in Mexico or be, let's say, in Europe, and they're just performing here. It has to be United States. And they want to make sure that it's not too large, again, helping define small. And so it has to be in no more than 10 states and cannot have more than 500 employees as of the date of disaster, which they're stating is February 29th of 2020. Okay, that's a lot, right? Now, again, defining small, the maximum amount of affiliate entities that basically have the similar ownership, that's 51% or more of the similar ownership. You cannot have more than 5 of those to be eligible for the SVOG, and it can be any industry. It does not have to be within this shuttered venue space. All right, again, defining as small. Now, they've gone into more detail saying that talent agencies, remember those are the people bringing the talent, booking the venues, talent agencies can be eligible, but they have to show that 70% of their operations is managing these very same type of bookings, representing those performers who appear at these live venues. So if they can draw the correlation to their revenues, 70% or higher concentration being on these live venues, then they may be eligible. Okay. Moving on, there's more. It doesn't end here. Theatrical producers applying for the shuttered venue must use venues that meet this Economic Aid Act definition, right? And so we're going to talk a lot more about the Economic Aid Act definition. We've already broached the topic a little bit here, but it's the defined audience and performance space. But they're also saying they would have sound mixing equipment and a lighting rig and etc. Right, so they're saying that these places are set up for this type of live performance, and therefore the roles, remember we talked about the roles, the tickets, as well as the equipment that has to be operated are such that it is designated or specific for this type of industry. Again, not a lot of room to change what they're going to do that didn't incorporate the public. Right, on top of that, applicants cannot apply to the Shuttered Venue Operator Grant if they've already applied for the PPP second draw. By the way, they did overrule that, right? So we saw that early on. There was a lot of concern. In fact, that's still somewhat of a concern. If you're going through the application process right now, if you're in the middle of any PPP situation that hadn't been finalized, they're still advising you to stop that process. They're trying to identify what the actual aid to your business is. I think as of Monday, the 17th, that became an option that was off the table because they closed the PPP program for those businesses. So just remember there is a connection between cross-funding. We'll talk a little bit more about other areas of cross-funding as we are learning about the RRF, or the Restaurant Revitalization Fund. All right, so SVOGs must have been in operations as of February 29th of 2020. So for organizations that just opened up, let's say you had a brand new movie theater and you just opened up March 1st of 2020, you would not be eligible, right, for the shuttered venue. You'd have to be in operations. Okay, so a little tough, especially for newer businesses, but they are trying to support businesses that were already opening before the pandemic hit. On top of that, applicants must not present live performance selling products of a pure sexual nature, right? So they have to be more family friendly, right? Not necessarily 100% associated to that sexual nature. All right, and that's nothing new. The government has always been that way. All right, with that being said, we have a little bit better picture of what's going on, right? Who would be potentially associated with that shuttered venue grant conversation. Now let's back into calculating the financial support. So earlier when I was introducing this, I said it's all about cultivating the right paperwork in order to make sure that you're clearly sharing the right story or the message on getting the support. So we're going to dive into that with that intent. All right, so what are they doing for you, right? So the whole grant, the whole intent of the grant is to try to make you whole in comparison to your 2019 year, okay? So they're using 2019 to compare against, and then making sure that the company has this, roughly 45% or half a year's worth of revenue in order to relaunch or to be able to move forward with. All right, so the maximum amount is $10 million. That's the maximum grant amount. All right, and then the award that you would receive would be equal to 45% of the gross earned revenue. Now I'm going to slow down when I say gross earned revenue, because that's a little different from some of these other products that you've heard about, for instance, the EIDL loan, the PPP loan. So earned revenue means money that you actually earned. Right? It wasn't given, it wasn't a donation, right? It wasn't a grant. It was money that was actually earned. So as we go through the presentation, we'll further define that. But right away, if it's grant money, if it's, remember, federal funding is another conversation, it's not earned, then it does not belong in the conversation of calculating the award amount. Right, next, there have been some set-asides. They're still trying to fill these set-asides, by the way, for more of these smaller businesses that have 50 or less full-time employees. So it's a big side. So the set-aside is to help the smallest and the weakest of the SVOGs be able to get back up and to survive, right? And they are making sure that an eligible entity was in operations. In 2019, we talked about before, like February 29th of 2020, but there's a couple different ways to calculate the amount. So if that eligible entity was in operation starting January 1st of 2019, and they have the entire year of 2019 in gross earned revenue in comparison, they'll basically take that amount multiplied by 45%, and that no more than 10 million is the amount that they'll be awarded. But let's say you have a business or an entity that was in operations less than the full year of 2019. What they're going to do is figure out when you actually opened and started operating for that year, and that would be a portion, however many months, and they'll go ahead and average that out, right? And then multiply that by 12 in order to get the equivalent of a full year, right? And then they're so just going back, so they're essentially doing the average gross revenue for each month, and they're having you multiply that by 6. So they're trying to get you to half a year's worth of gross earned revenue, no more than 10 million. A little confusing. All right, so there were some what we would call priority funding associated with this. A lot of this time frame has already passed us because of where we are in the space, but what I wanted to point out more importantly is that we are beyond that third priority funding for businesses that have suffered 25% or greater revenue loss between April of 2020 through December of 2020, right? And right now, businesses that might have already gotten either in the first priority or the second priority, where they saw a revenue loss of 70% or greater, right? They're able to come back to the well because there is funding still available to get another round of funding. All right. And so some businesses have spent a lot of time just trying to get their first application in and utilizing that money and starting to make plans. Just don't forget that there is that funding available for maybe a second round of funding if you do qualify that 70% or greater revenue reduction. Okay, so how can you use these funds? Right, that's a good conversation. And I want to slow down because this is unique. What they're allowing you to use these funds for is different from what they've told you you could use these funds for the idle conversation or the PPP conversation. So for this use of funds, they're allowing payroll costs. Okay, that's nothing new to us. But remember, there's no what we call double dipping. So if you also receive the PPP funds or got another round of idle funding, you have to make sure that you're not showing the same documentation for the same payroll period, meaning your idle money, you're keeping separate documentations for payroll as you might be doing for the SVOG money. You can't show the same documentation, say you use both buckets of money for the same payroll for the same people, right? That's clearly double dipping or trying to hide what you're doing with money. Now, rent payments, you can do rent payments, lease payments, whether that's equipment, whether that's the venue or the space, right? Whatever that might be. The only thing you can't do on that end is you can't prepay the rent beyond the time frame that they're allowing you, right? And so we'll talk about time frames here. They're essentially allowing you to use these funds over a period of 2 years. All right, utility payments, right? Just make sure you're not double dipping. Scheduled mortgage payments. Just remember, if you're making mortgage payments, you cannot prepay the principal. You can only service the debt. So that's principal and interest up to that period of time, cannot pay it off, right? Your scheduled debt payments, right? Remember, no prepayments, but the debt payments in the course of business operations prior to February 15th of 2020. Now, I know that feels like semantics there. But let's say the pandemic happened and you turned around and you borrowed money from one of those less than desirable companies. Let's call them predatory lenders. Okay, less than desirable. And you got the money quick. It was there in your account. Now you're paying something like 40 or less percent to borrow that money, and they're trying to take that money quickly out of the account. You can't go back and try to pay off that predatory lender with government money if you took out that loan, right, after the date of disaster. Now, if you had that arrangement before the date of disaster, you could service the note, right? You can make the minimum principal and interest payments, but you couldn't pay off the loan even then. Now you can't even service the loan if it was created after that date of disaster. A lot of people aren't thinking about that, right? And they may be trying to pay some of the newly taken out debt with those funds, but be careful. They're very clear that you can only service the debt from before the disaster, right? And they're also talking about the normal stuff, worker protection, expenditures. So any PPE, sanitation, any barriers that are created in order to protect your team or your clients or customers. Payments to independent contractors is allowed, right? That's very different from the PPP program, right? You are allowed to go ahead and hire and get those independent contractors. Big difference, though, is you're still held at that $100,000 annual compensation. So if you took that compensation out and you tried to give it an annual dollar amount, you can't exceed paying that person more than that $100,000 through the grant money. Now, if you did and you're going to pay them out of your earnings, that's a whole different conversation. But for grant spending, it has to be no more than $100,000 on an annual compensation basis. And you're okay to pay those 1099s. That's typically the difference between SVOGs and other businesses, entity types, including the RRF, is that they will have those performers coming in and doing the 1099s as opposed to an employee arrangement. All right, and then any ordinary expenses that's not necessarily, any ordinary necessary business expense. So if it's just part of your paying your bills and surviving, it's okay, including maintenance costs. Administrative costs are okay as well. Those are the fees, including licensing, right? State and local costs or fees you can use it for. Operating leases that were in effect on the date of disaster, which they're stating is February 15th of 2020. Now, if you signed a new lease or moved the space during the disaster, the new lease is not eligible for support with your repayment, okay, unfortunately. And then insurance payments they're allowing, whereas with the PPP loan, no, not unless it was employer paid health insurance for employees. In this case, your building, your general liability, your hazard, that can be included as a eligible expense. Now, this is also different too. They're saying advertising, production equipment, capital expenditures related to producing the theatrical or live performing arts, that is eligible use of funds. Whereas if you would have asked me if you could use your idle funds for marketing and promoting, maybe not, right? It depends. If you're doing as part of your pivot structure because your current target market had dried up and you didn't have any other option, you could connect that to a disaster conversation. But if you're just trying to beef up your SEO amount, right? Your marketing and your website, just trying to make it look better, that would not be an allowable expense. Here, it is allowable. It just can't be the primary use of funds. Whew. All right, so that was a lot. Let's talk about what you can't do with the money, right? So you got your can, and now we got your can't. You cannot buy real estate. Right? So if you think about that, the government doesn't know about that property if you're using government money to buy it. And that needed to have been disclosed early on in the arrangement, right? Not after. So the government doesn't want you buying real estate with it. Now, you cannot make payments on loans that originated after the date of disaster, the February 15th of 2020. And I told you that earlier, right? They are specifically calling that out and saying, don't do it. So make sure that if you took out any type of loans just to try to support you as you're waiting for additional funding, right? That money you don't connect to your use of spending. All right, and then make any investments or loans to other entities or to business partners or shareholders or to employees. You are not the bank, right? They don't want you taking government money and treating it as if you're investing that money in risk that is unknown to the government. You essentially are putting their money in other businesses or other ventures. That is not what the money was intended for. It was intended to support your business to survive, and that's where they want to see it used. Okay, you cannot make contributions or other payments to or on behalf of political parties, political committees, or candidates for election, right? It has to be used to support the small business. And then any other prohibited use by the administrator, which is SBA. All right, so think about this, right? We talked about growth capital. We talked about disaster capital. This is disaster capital. The only difference is now they're saying you can use it to start marketing yourself again, right? Start promoting those ticket sales, start hiring those contract 1099 performers to start getting going again. But anything that can't be directly related to a proper use of business expenses for survival, that is not a prohibited use. Okay, hopefully that makes sense. So let's continue. Let's talk about the application process. Now the application process, so I told you it was a little complicated, right? It's a little complicated. If you've already been through disaster assistance, you know what I'm talking about. We're dealing directly with the SBA. They're typically going to need to know a few things about your business, right? They're going to want to know who the entity borrowing the money is. What's their tax identification information? They want to make sure that they can pull your taxes up and confirm that the information you're giving them is correct. We'll go over some of that in the documents. But more importantly, you need to be able to clearly define who those owners are, what the amount that you're eligible for are, right? That award amount, and that you do, in fact, find yourself clearly within the eligible field, defining how you fit those categories we slowly went over before. How are you connected to the shuttered venue conversation? Right, you can find those details and actually access the application online by going to www.sba.gov/SVO grant. All right, so before you even go there, we're going to talk about some support documentation. We'll dive into the support documentation quite a bit. You'll also need to make sure that you have a DUNS number. And by the way, I had a new entity that I was supporting with this. They had not registered for the DUNS yet, as well as the sam.gov. And that's a little bit more complicated than you can imagine. So I'm going to share some tips, right? Because that one befuddled me too. So we're going to go over that a little bit more breadth of knowledge in just a second. All right, so support documents needed. Written certification of need. So this is a disaster loan, right? They want in your writing that you absolutely need this grant money for that business to survive. Now, we've also learned through dealing with government pools of money that when you get government money, right, there comes this acknowledgement, this certification that you are a disaster, right? That you were part of a disaster, your business would not survive without the government stepping in, and that becomes public record. So be mindful of your growth intention or what those future arrangements are going to look like over the next couple of years. And make sure that this certification is not going to derail you. Now, the government issued ID of the business owner or the representative representing the business. You're going to want the front and back. So the way that works is they are connecting the application to a login.gov portal. And so you will be using a phone verification in addition to uploading the pictures of the ID directly to the login.gov, which will then feed back to the SBA Connect. And if that sounded like a lot, it is. It's a pain. Okay, just make sure you've got your driver's license and you've got the cell phone or ability to do the verification process, right? The multi-factor verification process. All right, and then you're going to want copies of your business license. So here in Texas, we're like, we don't need a license to operate. You might, right? Make sure you're making sure any permitting that needed to be received, right? So maybe there's an occupancy permit. Maybe there is for zoos, there's other permitting available. Make sure you've got your permits to show that you are operating soundly and with the consent of the local county or government, right? And then any of your state issued formation documents. And that includes the IRS, employer identification number, that DUNS number I told you is all important, and any information on those affiliate businesses. So remember, affiliate businesses have similar ownership, which is 51% or greater, right? So if maybe your largest shareholder is pretty wealthy and they have a majority of the shares of your business, 51% or greater, but they have other business ventures that they are a majority owner on, all of those businesses become part of your grant review, right? All of those businesses. Remember, you can't have more than 10 affiliate businesses in order to be eligible to apply for the grant, right? That becomes a barrier if you're considered too big. Okay, so let's move into support documentation. Okay, so my eyes get really big when we talk about this topic, right? So number one, you need to document that gross earned revenue between January 1st of 2019 to December 31st of 2020. right? So that's 2 years essentially. You've got to document that revenue, that gross earned revenue, and break it down by month. They've got to see it by month. Now, your gross earned revenue is defined, remember, is the money the organization received from the sales of goods or services or counted as earned revenue. That does not include any other source of funding from organizations such as donations, sponsorship, government assistance, and any type of return on investments. You got to take that out of the mix. Right now, you'll probably include that as other income, right, or other revenue, but it won't be earned revenue. And so remember that separates out how much you qualify for. Now, if you're coming up with this documentation on financial statements, not tax returns, you're going to need to go ahead and sign with a natural signature. You're going to sign and date by the owner or an authorized representative for the business, not the accountant or bookkeeper. So please note that the accountant and bookkeeper can't sign your documents. It has to be the owner or the authorized representative. Now they are calling for your 2019 financial statements to be audited. All right, now if that seems easy to you, I'm going to be honest with you, it's not. An audited financial statement costs money, right? And it's not easy, and it's not necessarily a normal protocol. But they want to be certain that the money that they're using to identify your eligible grant amount is in fact a quality number. So you're going to need to get with your accountant to be able to identify that, all right? Okay, with that being said, you're going to also need your 2019 tax returns. It's a big one. Your 2020 tax returns. I put this at the very top for you. And then you're going to want your 2018 tax returns only if you're a nonprofit organization and you end your fiscal year in 2020. Okay, so some businesses don't have the end of year, they have a fiscal year, they end in the middle of the year. So they may need to see that full entire 2 years worth of history. Now, if you're in bankruptcy, now that's a tough conversation, you may still be eligible for the SVOG, but you would have to be in a reorganization restructuring kind of branch, and that would be that Chapter 11 or Chapter 13, and it would have had to have already passed, right, or been approved by the court, not be in the process of going through for review or consideration. It would have to have been finalized essentially, and you'd be repaying your creditors. If you have that situation, you're going to need to get a copy of all the dockets and the filings to show that you are in that status and you have been repaying back your obligations. And if you're a nonprofit, you need to make sure that you've got your tax exempt status documentation. All right, tax exempt status. So your 501c3, 501c6, whatever that document is, you want to make sure you have it. And then finally, I end on this because it is important and it can be a little tricky. They have to make sure you were in operations as of February of 2020. And so to be able to show that, a lot of them are looking for the bank statements from February 2020 to show that you were in fact operating. Okay. All right, rounding the corner, some of the harder things that you have to come up with are floor plans. Right, so we talked about the fact that in the shuttered venue definition, it was a lot weighted against having this fixed performance and fixed seating space. So they're requiring floor plans to show that that was in fact happening, right, in each of those locations. Now, if you're a motion picture theater, you would have to have the floor plans for that facility, and you would have to show that projection or booth space or that motion picture projector, right? That's part of that key equipment that needed to be documented as part of your application. And so they're actually going into detail here and on the motion picture, booth space, the projector, the sound equipment, the mixers, right, the lighting rigs. You actually have to show proof that you have paid those expenses and you own that expense or that equipment, right? Or copies of any type of lease agreements if you're in the middle of owning those equipment. That level of detail is being required. If you're a museum operator, it's going to be your floor plan showing the indoor exhibit space and at least one auditorium, theater, or performance or lecture hall with fixed seating. Okay. And then, of course, you have to document your links to any state or local ordinances showing that you have pandemic-related occupancy restrictions. So if it's the county that ended up shutting you down or minimizing how much attendance you could receive, you need to go back and find that documentation and be able to provide it to the government as part of your application. All right, and then again, this kind of goes with the other conversation. If you're a nonprofit or non-for-profit status, you need to show the 501, your nonprofit status or tax exempt status. Okay, so that covers that, right? So let's move into, again, the live venue promoter, theatrical producer, live performing arts operator. Let's talk about the theatrical producers. Right, so they have to show 12 months of contracts documenting the use of those qualified venues to be able to apply. Right, so the producers, remember there's different shades within the different industry, and you have to show that you did in fact connect yourself to the venues that would be considered, didn't have the option to pivot, right? So in these cases, you have to show those contracts for 12 months that you had with those venues that did qualify, all right? And then hopefully floor plans would be part of that conversation as well. You may need to go ahead and connect it to the floor plans. And then the artist performance agreements, right? You would have to have the agreement showing those type of artists that were hosted or performing within those venues. And if you're a talent representative, a talent agent, again, we're going back to having to show your revenue, that 70% or greater earned revenue in those managed bookings or representing those performers in those venues. It's a lot of detail, right? And those talent representatives must demonstrate with at least 2 performing artists or entertainers for that 2019 year, right? And then they talk about that marketing material. You have to show the marketing material or the advertisement that you gave them that 60-day leadway for the purchasing of those tickets, right? Or entry requirements. So you have to show the marketing material. Right, and then box office and ticket information, you need to show for February of 2020, any performance or anything that did not happen. So this is before the disaster. You want to show that you had that type of activity scheduled for 2020 and it was interrupted. All right, so a little different, right? Let's move on. Let's talk about support documentation for the application itself. So for the SOV applicants, they have to be able to document their average number of employees. The government's kind of cracking down on that. They want to make sure they understand how many jobs are being impacted by the government funding. And so they're asking for you to break that down into specific documentation for them. So the number of employees between March 1st of 2019, remember that's like a year before the disaster happened, all the way through February 29th of 2020, right? And so you need either the payroll processing documentation for those payroll periods, including the time frames. You want the number of count of all full-time employees for each payroll period. Now, full-time, they've defined for the SVOG as being 30 hours a week or more. Okay, so that's full-time, slightly different from PPP. And then the number or count of part-time employees working 10 to 29 hours per week, right? That's part-time for them. So 10 to 29 hours per week. If you have somebody working 8 hours per week, right, maybe a Saturday, all right, then that is not considered an employee for the SVOG. It has to be 10 hours or above. All right, and then total number of employees for each payroll period between that time frame, between March 1st of 2018 and February 29th of 2020. You need to document that and figure out what that average employee count or head count is. Now, 1099 labor, paid during 2019 and 2020 counts. So you want to be able to gather that documentation about any of those contractors. Okay, very different, but remember the headcount or the number of employees is a big part of getting that grant or showing how you're going to use those funds. Okay, now on to this DUNS number conversation. DUNS number is, it can be hard right now. So the government sent out this big mandate that said all these entities that were going to receive any grant funds would have to go and get registered through DUNS so they could have their credit reported, as well as sam.gov, right? And so what ended up happening is a huge onslaught of demand for DUNS. And I saw that firsthand as I was trying to get some of the stuff registered. It is not easy. It took like a month to try to get done. So I'm going to give you some tips that I learned along the way that makes this a little bit faster. You will go online, just like I have right here. You will apply online. What they're looking for is to make sure that the address that you're reporting as that venue matches the address on your organization documents. Okay, so that was my problem. I didn't have that. I had a registered office that was different from the actual venue address, right? And so just to make sure you guys understand, you need to connect the address for the entity with the address of the venue for DUNS. So they give you 2 documents that you get to upload for the automated DUNS creation number. Make sure that you've got some verification through the Secretary of State, right, that does connect the event venue with the address on the DUNS or the organization, right? You need to make sure you're connecting those dots. If you're not connecting the dots, you will get a rejection. Best way to get around the rejection in this situation is to call. The only problem with the calling is that myself, it took me 3 hours to get through on a call to somebody. And even then I was calling, a call center out of the country, it felt, and it was very labor intensive to try to get some help. But the key is you're going to tell them that it's for government funding. There's a separate division that's handling all government funding, and they've committed to trying to get that DUNS number turned around in 24 hours. The problem is you don't get access to that until you've applied online, and it can take 2 weeks to get a response back automatically if you're approved or not approved. So just watch it, right? And know that you can call in. Once you do the registration, there'll be like a little application number, a registration number. Call in with that registration number and make sure that they know your application is connected to government funding, so that hopefully you can avoid any long delays, because trust me, that can happen. Once you've gotten your DUNS number, and only once you've gotten your DUNS number can you go into sam.gov to apply for an account, if you haven't already done this. So some of you, maybe you're already familiar with getting government grants, right? Not more than 10%, by the way, not for this particular type of funding, but you've got a login. Great, you're going to go ahead and be able to give or know that you can apply, and they'll find you in the sam.gov. If you don't, just know, in addition to having all your formation documents, as well as your DUNS number, you're going to need to make sure that you've got a copy of a voided check for your bank account, so that they can identify the funding source, where they're supposed to deposit those funds, and all of that information matches the address for the shuttered venue, right? Must match the address for the shuttered venue, as well as the EIN for the IRS records. Okay, so it all has to be consistent. Remember, the government wants to make sure that what they're lending to the borrower does get recorded through the IRS into the proper EIN. All right, so all this, the DUNS, the sam.gov, that has to happen before you go onto the website to officially apply for the grant. Okay, now let's talk about what happens once you make it through and you've applied for the grant and you have all the proper documentation needed in order to justify you do meet the eligibility. Now remember, when we were talking about the documentation, we know that we need the audited financials for 2019. We'll need the tax returns, but they're asking for the audited financial statement, profit and loss, and balance sheet for 2019. You need both. Right? Once you've gotten all of that documentation, you've documented you're eligible, you need to make sure that you keep up with all of your spending records. The spending records is the kicker there, right? Remember, no duplicating documentation, no double dipping is what we called it. And you have to record all of your spending that's associated to using these funds and keep it for 4 years after you've received the funds. That's your audit process, is 4 years. Okay, and just make sure that you're complying with the terms. You're using the funds as approved sources. You're not buying land, right, or real estate, or using it for unapproved sources, but you're keeping a good handle on this conversation. Okay, so we're finally at the end, and we're going to take some questions. I'm sure there's plenty of questions here, but there are some details to remember. The SVOG grant cannot be applied for in connection, or you can't apply for the RRF, or the Restaurant Revitalization Fund, at the same time. It's one or. So remember, the SVOG and the Restaurant Revitalization Fund, they essentially came from the Economic Aid Act, or sister bills, right, that were built off of each other. And so they've made sure, the government's made sure that both those grant programs, they're servicing the highest need for those that are applying. So if you sell food and drink, right, and you're looking at those numbers, all right, and you're looking at how you calculate that RRF. Remember, there's 3 different ways to calculate your amount, and you've determined that you would qualify more for the RRF than the SVOG, then you'd apply for the RRF, right? But let's say you're looking at the SVOG grant calculation, and you're looking at that 45% of that gross earned revenue, and that's higher than what you might get under the RRF after PPP funding and such, right? Then you apply for the SVOG. You essentially have to be wise enough to be able to identify where you're going to get the highest dollar amount, and you can only go to one of those. Now, they do have a really robust question and answer document on their website, which you remember was www.sba.gov/SVO grants. Right, you will also find the application there. But if you have questions and you don't see it on the question and answer sheet online, you can just send an email to svogrants@sba.gov, and you'll get a response back, typically within 48 hours. All right, best way to handle that. All right, with that being said, my name is Rebecca Schultz. I'm the founder and executive loan consultant for Centerlock. My contact details are on the page. So if you have questions about the presentation, right, and I didn't answer them for you, then please feel free to reach out to me. I'd be happy to make sure that we get those answers for you. And with that, we're going to end the presentation, and hopefully we can go ahead and answer any questions that have come up.
Rebecca, I think everyone is in the same state that I'm in, with the eyes are glazed over because of all of the information, but why is there such a varied array of documentation needed for this? Is it because a venue could have any number of different events in it, or I don't understand.
Okay, so I know, right? So they're really, okay, they're not trying to duplicate aid to businesses that can find it easily in other means. So for the shuttered venue conversation, a lot of these companies didn't qualify for very meaningful PPP support because they did more 1099 contractor labor. Right, it's very prevalent in the SVOG, the shuttered venue conversation, to have 1099 labor. They're gonna, hire the sound mixers, or they're gonna hire, the performers when they've got the project, and those projects aren't running, 5 days a week or 7 days a week to where they can qualify salary. And so for the PPP conversation, it's always about the W-2 wage earner, right? And in this case, there aren't, or there are very little W-2 wage earners. And so they had to approach the solution in a different way. They had to measure it differently. And so they came up with different metrics and a different use, right, to really cater to the industry. But this particular industry is fraught with all kinds of different qualities of businesses that may not continue on a regular basis. I'm trying to say that very politically.
You are being diplomatic. Yes, you are.
And, um, and so they're trying to make sure that there's no fraud. And so by forcing people to literally provide floor plans and copies of contracts showing that their operation was dependent on those eligible venues that really had no other alternatives and were strictly shut down until government ordinance allowed them to reopen, they're trying to make it intensive so they can reach the desired target market that needed the support. Yeah, go ahead.
Rebecca, I kind of heard you talk about the Duns and the Sam, and I know it was just a disaster when they announced that because everybody tried to rush to it, and everybody got so frustrated. I have a few that just stopped. But what do we think the time frame is right now for getting the Duns and then going through and getting the Sam?
Okay, so I learned that trick, right? So Duns did allow for a whole new avenue to be opened up if you are claiming government grant or government assistance need. The problem with the system is you have to identify yourself almost manually. They'll have a code in there that says, is this for government grants? Right, and you can click yes, but they're still going to push you through the same application process, which is taking roughly 2 weeks for them to identify a rejection. You have to put the application in and then call and manually identify yourself for government grant. And then when you do that, you identify your application number, right? Then you get the assistance. So my key to that is you have to really make sure that they understand clearly that this is for government funding, and you make sure that it's been assigned to the appropriate task force. And that takes more work than just the initial application. And for the SAM.gov, that is confusing. That is confusing. But the good part is that the SBDC has programs like PTAC that can help answer those questions. But if you don't already have a profile with SAM.gov, it does take roughly a week, 7 to 10 days, to be able to do the online application and make sure that it's being set up and it has officially been set up and approved.
So if I'm adding this correctly in my head, we're looking at probably 2 weeks for the Duns and then an additional 7 to 10 days for the Sams. And that's if everything is perfect.
Correct. 100% correct.
And
So-
one of the major pitfalls is the address. I mean, I'm thinking of my one entity that has a different office address than where the venue that he normally does. So what's the best way to connect those dots?
Yeah, so you would have to provide a lease agreement or support documentation like a bill, utility bill, lease agreement, connecting that entity to allowable use of that space. And so you would only get the opportunity to upload that when you dispute their feedback that it was declined. That's the trick, right? Like you'll go 2 weeks before you'll get feedback from them. And the 2 documents they require that you upload is going to be your EIN verification and your state formation documents. But if those don't show that mailing or billing address being the venue, then you essentially are having to wait for a rejection to be able to upload the utility because they're only allowing the 2 documents.
So would you suggest, in my case, since it's a separate venue location, shouldn't he just put the normal address that he got the formation and the EIN through? which isn't the physical location of the venue, but at least the addresses match.
Okay, so this is the crazy part. That's a really good question, Roger. They have to connect. When you're going in and creating a DUNS number, make sure it's not a residential address. I know this gets into that building business credit conversation, because a residential address, like maybe you have your formation documents and the Secretary of State coming to your home address, right? You really got to be careful that it's not considered residential. It comes up and looks a different way, right? The director connection to the venue that you have, if in fact that is your lease and you've got an agreement and that's where you're operating this from, the better off you are in this whole process of connecting the dots. If you're showing a different address, that's another step that you have to document or come about whenever you're trying to show that you have that particular venue. Just be careful about that. It's a case by case situation.
Okay, well, I guess if they would have put this type of ownership on the restaurant revitalization fund, they probably would not have run out of money.
Amen. But notice it's such a nightmare. They're like, we're not going to make you do. I bet you Dunn's was very upset. Don't do that to me again.
Okay. Another question, and I'm not trying to take up everybody's time. So, another question is, one of the venues that I'm working with hosts the venues every once in a while, not on a regular basis, but they do have a smaller section of fixed seating, but their venue site is much, much larger than just that seating place. And they do sell tickets, but their concern was, gosh, I mean, we do this every once in a while, not, all the time. So
they would have to go back and document how many performances or events were served in 2019, right? So they got to go back. And if they can do an average of 4 events a week, right? If they can show an average of 4 events a week, then they may be eligible with the floor plan for that fixed seating and performance space. Now, if they go back and they're looking at 2019 and they're like, I can maybe show an average total of 2 events per week, then they're not eligible.
wow, walk me through that one more time.
Yeah, so they would have.
So it has to be an average selling of tickets of 4 times a week, with the actual event being held 4 times a week, or different events or whatever.
Correct. Somebody has to have the ability to buy those tickets and see that promotion 60 days in advance of that date. And then, so you've got to show your marketing. They want to see your marketing for 2019 and 2020, or up to that February 20th of 2020, just before the disaster, and understand that your business was interrupted. You couldn't operate. They want to see that on marketing materials. And then they want to see historically where those events were held on average of 4 times a week. So on those seasonal performers, like let's say you have an amphitheater, right? And the amphitheater is rocking and rolling 7 days a week, but they're only doing that 7 days a week for maybe 3 months out of the year, right? So 7 days a week, how many events per day, right? So you would take that and divide that by your 365 to figure out your daily, or I guess 52 weeks if you want to do it weekly, right? And they'd have to have an average of 4. So if you even have a seasonal venue, if you can show that you hosted, enough during that seasonal time to justify the average of 4 times a week, then you're good. If you can't, you're not eligible.
Wow, both the entities that I've been working with or talking to about this, neither one of those are going to meet that criteria, because it's more of, one is probably once every 3 weeks, and the other one is probably once every 3 months for events. So that is not eligible. Okay.
Woo,
Right.
I know, right? And that whole marketing, and it's no joke, like they want to see the marketing materials. You have to provide the marketing materials.
Yeah. Okay. Sorry, I didn't mean to take up everybody's time.
So, hey, Roger, we're conditioned to that. Okay, what if we have like a dinner theater where they have the theater plus they serve food? Well, one thing, usually their seating is not fixed, but say it is. Should they be looking at comparing how much money they would get with the SVOG versus the RRF?
Correct, 100%. That's exactly what they should do. They should look at what their RRF calculations are, so they can go directly to the kind of little pre-application SBA has made available, and that's www.sba.gov/restaurants. All right, so you can get a copy of that. So just do the calculations, 1, 2, or 3, whichever they're eligible for based off of how long they've been operating. And then at the same time, were they in operations for all of 2019? If the answer is yes, then they can just look at that gross earned revenue, right? And then just multiply that by 45%. And then they can compare what they would get from the calculations under the RRF to what they might be eligible for under the SVOG, and then make a decision what serves them. Now, Roger brought up a really good point, right? Like, funding ran out really quick on the RRF. I mean, there's still little tiny money in there if you are very, very small, make, gross annual revenue of less than 50,000, then you're good. But anybody else, we're waiting to see whether or not they refund that. Now, the SVOG has not run out of money yet. Not that, they've told us it's still out there, still lending. But again, the application process is hellacious. So, it'll be a while before that money runs out. So that might be an alternative if you're not so comfortable with the RRF being able to pay out.
Okay. And I don't know. Go ahead, Roger.
Well, I was going to build on that and build on what you just said about the Restaurant Revitalization Fund, because the amount of people that were able to apply was just a subset of the people that could and wanted to apply to the RRF. So if you think about the fact that that small subset used all that money, how in the world are they going to get to the rest of the people or rest of the entities?
That's twofold, Roger. So, so remember, Ms. Guzman is our new director of SBA. She's really seasoned, really good at what she does. She's been around it for decades. And you could say that although there's a problem, right, with the capital amount, and it's just sad that, people are being left out, even though they should be eligible, you have to kind of turn that around and say, after the failed experience with the SVOG and that application going, down several times, and then people struggling to get access to capital, they pivoted themselves and found a way to be able to improve the process to speed up access to capital to other industries that needed support. So it's kind of like a testament to their ability to support people. They made a change and it worked, right? A little too well. They should go back to the old way.
That's true. That's true. That's a great point. I guess maybe my question might have been more directed at the funds available, right? So that really that's out of the SBA's hands. That's in somebody else's hands for that. So, have you heard anything about that?
The only thing I've heard is that talks are still continuing. There's new bills being presented that are supporting other industries like the hotels that have also been decimated through this. I have not heard of them refunding the RRF program specifically for the restaurants and such, but I still hear them talking about supporting the hotel industries.
Okay, thank you.
You're welcome.
Oh, that hurts because I know there's so many restaurants that were impacted that may not have been part of that priority funding group.
Yeah.
Even worse than that, I was on the phone with a restaurateur just last night, and I mean they were still struggling with their application, you know, and that makes me feel bad because it's like, okay, well, the money's pretty much gone. You know, like at this point, you know, you still want to get your application in, but you know, the likelihood you're going to be able to get anything right now is pretty slim. But she didn't know that she was considered a priority group, and they really struggled with that because of that crazy definition of socially and economically disadvantaged. I had to break that down for her. And in her case, she was a woman business owner, but her husband had the majority, so she knew she wasn't a woman business, but she was Hispanic, and they had just been denied for credit, right? So I was like, you're part of a socially disadvantaged group, and you can directly tie the economic disadvantage, not being able to gain access to capital in a free market the same way. So yeah, you need that priority. And they came back and they were like, oh, if I had only known that, I would have applied earlier. Right? You're like, oh my goodness, this is horrible.
Wow, that is sad. But are there any other questions? Anyone else have a question?
My analogy for the SVOG and for the restaurant revitalization running out of money is kind of like, you know, we all have kids running around, right? So you got your 6-year-old asking for a piece of candy, and you're like, oh, you want a Reese's peanut butter cup? Oh, yes. And then you hand them a piece of broccoli, and it's like, oh my God.
Exactly.
I mean,
It's
it's
a
like,
great analogy.
you know, it's this huge buildup to, oh, this is going to be great. And then, you know, it's just not quite that.
Wow. A piece of broccoli. Yeah. Yeah. Well, Rebecca, thank you so much. As usual, you are a fount of information. And as soon as our heads stop spinning, we may be able to, you know, contact you with other questions. I don't know. But I just want to remind everyone that we have a survey coming after this webinar, and please respond to the survey. The information that you provide is so beneficial, and it helps us to improve our programs. We have some upcoming webinars on the screen. Tomorrow is a busy day. We have 2 tomorrow. A new presenter, Jamie Ellsthorpe, the success mindset that will grow your business. I've seen her presentations, and they are very interesting and make you stop and think. Then tomorrow afternoon, we have Laura Kibbe back. She has been wonderful to talk about presentations and tips for being effective and calm. Yeah. And next week, we have co-opetition, a word made up by our retail expert, Mark Wilson. Jamie will be back for naming, niching, and branding. And then Lorna will be back as well on the 27th, another day with 2 presentations, meetings, how to make them short, sweet, and effective. I want to thank everyone, all of our benefactors, the Small Business Administration, the state of Texas, North Texas SBDC Regional Office, and North Central Texas College. They do provide funding for the North Central Texas SBDC, and you can get information on all of our webinars, contact information. You can schedule an appointment with an advisor or find other resources for small business owners by going to our website, www.sbdc.nctc.edu. Thank you all for joining us today, and we will be ending the webinar. We will see you tomorrow, I hope. Thanks so much.
Thank you. Bye, everybody.
Bye-bye.